Polestar Automotive Company. What is going on and where is it going? Is it going to get delisted from the Nasdaq? Is it going to be hit by the tariffs of Biden, of the Chinese-made EVs? Let's talk about it. First off, 102% of Biden tariff. Is it eligible for that? It depends. It depends on what kind of companies Biden is targeting. Is it targeting companies that has 100% shareholders of Chinese companies? Meaning if Polestar will be 100% held by a Chinese company, or is he targeting companies that has majority shareholders of Chinese companies? Which means, in this case, only in the second case, Polestar will be eligible for the 102% of the Biden tariff. Why? Because Geely is a majority shareholder of Polestar. Geely is a Chinese company. If Biden is only targeting companies that has 100% shareholders of Chinese companies, then that means Polestar is safe. It's not eligible for that kind of tariff. If Polestar is eligible for it, what will happen in the future? What will happen is it will lose 30% of the sales market in the United States and Canada. Why? Because in the last press release and last earnings call of Polestar, which I have been following and listening to, Thomas Ingenthal himself declared that 30% of the cars that they're producing is going to the Northern Americans. 30% of the cars that they're producing is going to Europe. And the rest, 40% of the cars that is left, is going to China and Asia Pacific, meaning also Australia, etc. If the tariffs will hit Polestar, then they will lose 30% of the market share in the United States and Canada. Why? Polestar is a direct competitor to Tesla Model 3 and also Porsche Cayenne with its Polestar 3. Why? The rollouts of the Polestar 3 and 4 just started now. We are now on the 19th of May and the rollout of those new cars are today happening. This is the start of their cars. And those cars are the cars that he wants to have high margins on. High margins to have at the end of the year of 2025 to have profitability on. That's Thomas Ingenthal's words themselves. And those words have not changed for years. They've always said, we will reach break even in 2025. And at the latest of 2025, we will reach profitability. With these tariffs, forget it. It's impossible because they will lose 30% of their market shares. Why? If the tariffs hit them, they will have to raise their prices with, I don't know, to compensate for the tariffs. They will have to keep the margins that they want. If they want to see the margins shrink, okay, they will keep the prices as they are. But the thing is, at this point, Tesla Model 3 is actually cheaper than Polestar 2. Which one would you rather buy? Polestar 2, a brand that is actually new and you have not really a lot of information about, or you would rather buy the Tesla Model 3 that everybody loves and adores. And you're financing Elon Musk, of course. Everybody loves Elon Musk. Which one would you rather buy? And the Model 3 is actually cheaper. Why would you buy something? The devil you know is better than the devil you don't know, right? And especially when the devil you know is actually cheaper than the devil you don't know. If they raise prices, for example, they raise prices to compensate for the margins, they will not be able to sell any cars in Northern America. They will not. Why? How will they be? Because the Polestar 3 is a direct competitor in price margins, in price, with the Porsche Cayenne. You think people buy Porsche Cayenne? Next year they're not going to buy Porsche Cayenne anymore, or whenever they have to buy a new one? Really? They're going to opt for a Polestar 3 instead of a Porsche Cayenne if it's in the same price range? No, because people buy the Porsche because it's a status symbol. It's not just a car, it's a status symbol. The same reason why people buy a G-Wagon. The same why people buy a Ferrari. a Lamborghini. They don't buy it because it's a good car. No, they buy it because it's a status symbol. And they run around with it and they're like, oh, look at me. This is what I got. They cannot do that with a Polestar. They cannot. It's not the same thing. You're buying just a car. So that's the other thing. Europe is also considering tariffs on Chinese-made EVs. They have not officially confirmed it yet, but they are. They are trying to stimulate the internal competition instead of having external influences of other competitors who are cheaper. Which is actually kind of funny because in the last, in all the earnings calls that they have been talking about, Polestar is actually a luxury car. It's not cheap. It's actually expensive for what it is, and that they are proud of it, actually. Polestar leaders are proud of the fact that they are selling very expensive cars. Delisting from the Nasdaq. They just got a warning from the Nasdaq that they have to file a fiscal year 2023 because they didn't. Polestar is actually negligent about that. They still haven't filed it yet. I hope they will because a lot of companies get delisted for less reasons. So that's another problem that they have. Another problem that they have is their share price is tanking so much that it's almost breaking the $1 level. It hasn't broken the $1 level until so far. It still hasn't. But if it will, and it closes below $1 level for a couple of days, they will get another warning from the Nasdaq that they have to be compliant. If they're not compliant and they're listed as a publicly traded company on the New York Stock Exchange, they will be thrown off of it. They will be delisted because you have to have compliance. If you don't comply, you're out. And so if the share price tanks below $1 mark, they will get a warning. And what is a solution to that? Most of the times, what they will do, what the other companies did, is have a reverse stock split. Which means, for example, if you have 5 stock shares, it will become 1, but the price will be, of course, all the 5 shares combined. So instead of $1 per share, it will be $5 per share, but you will have 5 times less shares. Is it a good thing? A reverse stock split is never a good thing. Normally, the share price tanks, and then it can recover after a couple of months. Yes, it can recover and go up again. But it all depends on profitability, of course. Is profitability in the future? Because 2025 is not that far anymore. And these Biden tariffs has not been playing a role until so far for all these years. If these tariffs will start playing a role now for Polestar, forget it. They will lose 30% of the market share in the United States plus Canada and 30% of the market share in the European Union. It's just pure economics. They cannot ask more for a less of a product than a Tesla and a Porsche Cayenne. Porsche Cayenne is actually a status symbol, you know what it is, and a Tesla is just a technological advanced thing. I mean, that's where we are now. On the 23rd of May, there will be an earnings call. There will be quarterly earnings of Polestar published, officially made, and we will see what they will say about the guidance in the future, how they will see the profitability, will it shift, will it move up for 1 year, 2 years, 3 years, and what they will actually say about the company, because I love the company. I'm invested in the company. I want this company to make it happen. I want this company to thrive. But with these tariffs and them being owned, having a majority shareholder that is a Chinese company, the logistics of it makes it very hard for Polestar to be profitable in the future. On the other hand, if Volvo would have stayed like the majority shareholder and not have changed anything, yeah, then these tariffs would not have affected it at all. But that's a discussion for another video.